Hey everybody, this is Jose Blasco. Just checking that sound is good. We're about to get started. Can I have a quick hello on the chat box? Just so I know that you hear me well, sound is good, and we are ready to get started. This should be the case, but as always, it's always a good thing to have a confirmation. I'm also gonna start my video stream so I can say hello here from the bottom right corner. How are you, everybody? It's good to have you in the session, and here we go. We're just on time to begin. We are now live. Welcome to the session, everybody. Thank you for the confirmations, guys. Very nice. Perfect. Okay. Thank you. Thank you, everyone, for joining me. Today is November 26, 2020. And of course, the first thing I should say, obviously, it's happy Thanksgiving out there. I do expect today the session to be less crowded, obviously, especially, since we are trading the US markets and Thanksgiving is such an important celebration in the US. So I would expect that most of you are probably international traders, and probably most of the US guys are right now just getting their turkey ready or whatever form of celebration they're going to use with their families, and everybody's together, and very good times. So today, again, we are running our session because, while today it's a key holiday, tomorrow the market will be open for a few hours, only until 1 p.m. in New York. And therefore, if we were to find any opportunity today, it's something that you could execute tomorrow. And for sure, we are committed to your support, and therefore we're running the session as normal, even though today obviously is not a normal day. Okay, so the session is probably going to be a bit shorter as well. So we'll see how it goes. But let's begin so we can get into those opportunities out there in the market. Okay, very nice. So thank you for joining me one more time. Before we start, a disclaimer. Please, everybody, read carefully the disclaimer that I am highlighting right now. You can see how it's being highlighted. I am counting on you, as always, to read it carefully, to read every word of it. Is a couple of paragraphs, so please read it carefully. It's important stuff, and that way you are well aware of the legal implications when it comes to financial sessions or sessions related to financial markets. Very good. Boyan, how are you, my friend? Happy Thanksgiving to you. Here we go. Talking about committed traders out there. Boyan being in the US and joining us today. Very nice. Love it. Very good. So let's jump into the chart, my friends, and we're going to start. And by the way, I would say that today there was some maintenance going on TradeStation because I had difficulties to run my scans. Okay, so if you are running the scans, maybe later today or whenever you have the time to do it, and you find some difficulties, it's possible that today TradeStation it's taking advantage of a very slow day to go ahead and do maintenance on services and so on. And again, it took me a while to be able to run the scans. Okay, so I'm not sure if you will encounter the same problem. But before we start, as always, quick one. So first, I want to look at the markets. Okay, so we'll look at the S&P. From there, I'll move into the VIX and review the trades that we have on. And from there, we'll get into identifying new trades. And the moment we find anything that meets our rules, then we will approve it, if you wish. When it comes to, hey, you trade, you meet our rules. And of course, we cannot execute today, the market is closed, but we'll be able to have it ready for tomorrow. Even though we'll have to reevaluate and reconfirm the trade, because when the market opens tomorrow, we may have a gap, we may have something going on. So again, it'll be important to reconfirm. Okay, but anyway, when it comes to the S&P, well, I guess that most of you are aware that it's just amazing what's happening this year with the market, and when I say amazing, I mean it all the way, and I mean it in both directions. The moves to the downsides are incredible, and the moves to the upside in the market are, I would say, even stronger than the moves to the downside at times. It's really unbelievable what's happening in the markets, especially when you think of what's happening in the real world. With especially with COVID and all the consequences attached to that, to people, to businesses, to economies, etc. So unbelievable. And the reason why I'm saying that is because we are again in a situation where the market may start making all-time high one more time. We do have a collection of UFOs there helping to support the price. The climate on the S&P, it's 2 out of 10. So in other words, if we have a push, it may be a push for another week or two non-stop going up. And again, amazing. Okay, amazing. So in that sense, when it comes to trades that we have on, for the ones of you that you are in the long-term trade that we put together for Intel, probably you're quite happy with the trade. So this is a trade where we were using a complex option strategy, where basically we bought a call by selling two spreads against. So basically the spreads pay for the call. So this is a trade where if the stock drops to 40 or below, we're going to be happy to own shares. This is a long-term investment. But if the stock starts moving up, immediately we start making money. And that's the case. We entered this trade when the stock was trading at 44.5. The current value for the stock is 47. And there is not much to stop it until it gets to that red UFO. Okay, so lots of room to go for Intel, especially if the market starts making all-time high. So we certainly have an opportunity there to continue profiting from this trade with Intel. Not the same when it comes to Merck. Merck is a trade, let me switch to the right time frame. Merck is a trade that concluded last Friday. It was a non-directional trade. Let me give you a proper scaling of the trade so we can see this properly. So this was a non-directional trade that we put together on this particular date. That was October 29. We were using expiration date of November 20. That was last Friday. We met last Thursday. That was one day before. The price of that stock was somewhere here. And basically what we said is that if a price goes above the green line, we will be in a profitable trade. And the reason why I'm pointing at the green line instead of pointing at the purple area, which is normally what I do, is because during the life of this trade, we conducted one action, which could have been more than one, actually, and would have been better. But not to make it more complicated, I remember mentioning I would do it once only. And that action was to convert the iron condor into an iron butterfly. That's what we did. And by doing so, we basically removed more than half of the risk away from the account. But unfortunately, we went from a very large profitable zone to a much shorter profitable zone. That was that zone here, okay, above the green line. And unfortunately, when the stock expired on that Friday, it was right below, meaning that this trade took a full loss. While the full loss was less than half of what we planned in the very origin, which is good. It was a good risk management or risk management action. We never got back to some level of profitability in this trade. Funnily enough, if you had done nothing at all, then the stock would have ended up in the purple area as expected from the very beginning, even though it went out big time, right, which was the reason for the action. It went outside the purple area big time. That's what I meant to say. And that was the reason for this damage control action that we had. And again, in the end of the story, this trade was not profitable. Okay, so that's the end of the story for Merck. So I'm just going to remove it. So we have it out of here. And then Roku, it's another trade that we have, which is also working very, very nicely. This is a trade that we entered at 227. Okay, so we entered on the day after. We planned the trade on the 12th, but we entered on the 13th. It was the day after, and we entered at 227. So basically, this was our entry price, and since then, that stock has been moving very, very nicely from 227 to 277. That's a $50 move. So this trade, it's performing amazingly well. It's like a 300-400% return on the call that we bought. And again, we are using an expiration date which is January 15. There was no information, if I remember correctly, there was no information about earnings for that stock, but now there is, and earnings are happening on February 11, meaning that no matter what, we're gonna be out before that, which is January 15. Okay, so now should we just wait for that and do nothing? No, as we always say, you should have a portfolio with multiple trades that you run in parallel, where some trades are pointing to the upside, other trades pointing to the downside, all those trades with positive gamma, other trades should be non-directional with a positive theta. And again, you should have a diversified portfolio based on the portfolio Greeks. But at the same time, especially when you have such a parabolic move on a stock, things don't last forever, especially when you now see the climate to be 10 out of 10. So it's starting now to be more likely that stock starts turning around instead of continue. Now with the S&P ready and about to continue making all-time highs, if that was to happen, that stock is likely to continue, right? So you don't want to get out. But at the same time, if the stock was to turn around, I mean, if it goes below that UFO, it may drop from 268 all the way to 250. So that would be almost $20 of loss there just because of doing nothing. Since your portfolio should be diversified, it would not be that big as a problem because other trades would profit in the meantime. But again, from an efficiency point of view, I'm just going to say that we're going to set an alert, okay, right here. So I'm going to use a red line, okay, and we're going to set an alert right here. So this is 268.14. So we'll make it run number 268. Okay, here we go. And that line represents an alert, meaning that if that stock was to ever go below this line, we're gonna get out. And worst case, we made from 227 to 268, we made let's call it it's $41 in this case to be precise. Okay, so that would be the plan for that particular trade. Okay, so nice one with Intel, nice one with Roku, not so nice with Merck. Hey, my friends, that's trading, and if you have traded for a while, no need to say some trades win, some trades lose. If you are new to trading and you are new to the sessions, just get ready for this, my friends, because being a good trader is not only knowing how to enter the market, is also knowing how to exit the market, and exiting the market will give you two scenarios, which is to exit for a profit and to exit for a loss. So the life of a trader is to learn to collect profits, but also to learn to collect losses when it's time to collect profits and when it's time to collect losses. Okay, cool. Anyway, so let's continue. Okay, so we now know what to expect out there. To be honest, I forgot to look at the VIX. So the VIX has been dropping right since after the election. So the VIX has been going down, down, down. Before election, we were hitting the 38 mark. We are now dealing with VIX of 21. Of course, when we look at non-directional trades, for example, notice how the list right now is a list with 7 stocks only. We used to have a list which was, the whole screen was full of symbols. So again, options are becoming cheaper and therefore opportunities are less. But also options are becoming cheaper. So what happens on the directional side? Well, look at how many directional opportunities we have. Now we have 26, where there was a time where we only had 2 or 3 when options were expensive. Okay, so again, when the VIX is high, we find more non-directional opportunities and less directional opportunities. Okay, when the VIX is low, we find more directional opportunities and less non-directional opportunities. Okay, but the idea is to, in a rotational manner, if that's right for me to say, just to keep looking at those opportunities, and whenever an opportunity is available and your account and risk management rules allow for the trade to be taken in parallel with other trades that you may already have in your account, so then you just take it, all right, and that's it. Okay, so we always look at all those scanners. Okay, now I don't have any non-directional trade, so I'm going to start with non-directional today, and the first one on the list is ZM, and let's see what we have with that stock. Okay, so well, first of all, we're not going to touch it. Okay, and the reason why is because you can see in the bottom left, it says here that next earnings are on the 30th of November, and of course the 30th of November, as you can see, it's next Monday, right? And if I was to do this trade, I would need to use December 4 expiration date, and I cannot do that because obviously I would now be exposed to what's going to happen with the earnings of that company. Okay, so we are not gonna touch Zoom, and we're gonna check Lulu to see if Lulu is giving us something better. Okay, so Lulu has earnings on December 10. This is much better, but again, if you look at what's happening with the stock, notice how that stock is basically making all-time high. We don't have red UFOs in this chart that is currently using the regular session. If we look at pre-post market, we don't have red UFOs either, and therefore, while the technicals of that stock suggest that non-directional trading could be appropriate, well, we also need to meet our other rules, and the other rules say we need at least 2 UFOs above red-colored UFOs, and we need at least 2 UFOs below green-colored UFOs. We don't have them, so we go to the next symbol, which is Octa. So with Octa, I do have UFOs above and below, but that performance 38% is not acceptable. We need a minimum of 48% for non-directional trades. So if I move to regular session, I do have 53%, which is great. But raising a flag here, we only see one UFO. So let me see if there is more price data above, and we don't. Okay, we don't have more prices above. So that's another stock kind of ready to make all-time highs if that was to happen. And therefore, we only have one UFO, and there is not another one. It doesn't matter how much data you load, there is nothing above price. Therefore, we're going to have to pass because our rule states we need at least two UFOs above and below. What about with DocuSign? So with DocuSign, we have 85%. Again, one UFO, that's fine. If I look at pre and post market, do we have two? No, actually we have 45%, so that's not good. What about looking at the all-time high? Well, actually the all-time high are much, much, much higher. Okay, so maybe we're lucky there. So this was September. Okay, so let me go back to regular session and make sure I got data loaded starting on September, first date, September 1st, 2020. Okay, and with that date loaded, I just want to scroll down to see if there are more UFOs above, and they are. Okay, and they are. So I got plenty of UFOs above and below, so that's fine. But the nearest option I would sell would be located at 260 something. Okay, so I'm not sure it's gonna work. Actually, it's not gonna work. Okay, because I'm just noticing now that earnings are on December 3, and December 3 is happening before December 4, isn't it? Meaning that my minimum date for me to use as an expiration date is going to be December 4. Therefore, it's not going to work. Okay, so we are just going to pass on DocuSign and look at the next one, CrowdStrike. And here we got 44%. That is not acceptable. Well, actually, I need to also go back to my normal amount of candles. Here we go. So we got 50%, so that's good. Now, are we making all-time high? Yes, we are making all-time high. And again, I'm checking that very quickly because the fact that the S&P is making all-time high or about to make all-time high means that most stocks are in the same position. So therefore, I have to check often. So now, if I look at pre-post market, we may have more UFOs, but they only give us 39%, which is under the 48% we need. So we pass, and therefore we move to the next one, which is Procter & Gamble. And in this case, we do have plenty of UFOs above. Let me see what's the probability figure that we get. Earnings are on January 21st. Okay, January 21st. So that's good. Okay, that is good because it does allow us to use many different expiration dates. We got 53%. If I look at pre and post market, we got 34. So that's not good. But regular session is very good. Okay, and we have UFOs above and below, and hopefully we can find a setup that is good enough for us to take the trade. When it comes to monthly time frame, notice that stock is also kind of making all-time high, very close to that highest trading price ever. So I'm not fully sure this is gonna work well because we're gonna pass, guys, because look, if I measure the distance from the current price to two UFOs below, right? And that's the distance from that vertical line, and I project that vertical line above. So we are way past those UFOs. And fair enough, we got 4. But again, if you calculate this distance, okay, from current price to those UFOs and you project it below, we're not even close to the UFOs below. So in other words, that would be a non-directional trade that would be very biased to the downside because we would start this non-directional trade far from the midpoint of the range. And I could make it up and change the strike prices of the options, but that would not be recommended because then I'm making up a trade. Just means that I'm trying to make the market to show me what I want to see instead of respecting what the market gives me, right? And that is not a professional approach to trading. Okay, so we're gonna look at the last one in the list, which is Next Era Energy. And as it's loading, here we go. So we got 50% stats. This is good. only one red UFO, so that's concerning. What about pre and post market? 39%, that is not good. So what happens if I go back to regular session and I look at the monthly time frame? Where are we at? Yeah, again, another stock that is kind of making all-time highs. And with all of this, you can see how this list of stocks is not providing us with anything that is solid for us to do a proper trade. Okay, so I'm gonna move from non-directional trades to directional trades. And since we got a long trade in the system, which is the trade with Roku, so what I'm gonna do as an offset, okay, remember we need to create diversified portfolios. I clicked on trades to be short. So I'm gonna try to look for shorting opportunities so I can be in a position where this, I can have a hedge against my long trades, okay, and profit if the market was to fall. So with VMware, problem number one is that we got 48%. If I look at pre and post market, we got 35%, and that is not acceptable because for directional trades we need minimum 50%. Okay, so not good. What about PTON? So with PTON, we do have 50%, so that is good. And if I was to look at other parameters of a trade, and also, by the way, let me check pre and post market too. So that's 53%, correct? Yes. So what do we have? Well, we kind of almost have a trade here. But this is something that you're going to have to redouble check in the following day, okay? So take a look. First, from a climate point of view, the climate is confirmed. This is candle number one out of what stats suggest is going to be 4, okay? So we are in the right climate condition. So time to take the trade. Now, when it comes to the reference point for our trade is 107.45, okay? So 107.45, if I was to draw a line very quickly, okay, so 107.45, just so you see what it is. This is basically just right above this red UFO. Okay. Now, what happens? Well, that market recently has been going down, and therefore, when the market opens tomorrow, very likely that value of the moving average, which is currently 107.45, that value will likely be a bit lower. So it may be lining up with that UFO correctly. And notice that in a regular session there is also a UFO, but that one is much higher. So that one, is pretty, but that one does absolutely not line up with the EMA. Okay, so we are not really concerned about this one. So here, what basically I'm leading you into here when it comes to homework for yourself for tomorrow is looking at PTON using pre and post market data, and make sure that the EMA has moved to a point where it's lining up with this particular UFO, which is located here at 106.84. Now, of course, notice that this is if I zoom in, notice that this is a very, very narrow UFO, as you can see. It's a 1 point only. It's almost like as a resistance line more than a UFO. Normally, UFO is a price range, isn't it? Is a band. In this case, it's not like that. Okay, so that's what the app is giving us, and we better go with what the app tells us, because the app knows better than the human eye, correct? But at the same time, from a trading point of view, of course, we're gonna have to be a bit more flexible than that. We cannot just trade a trading zone which is 1 cent. That doesn't make sense. Okay, so you may want to think of this area, okay, as your trading area, okay. And since we have greater probability with the pre and post market data versus the regular session data, so maybe one way to approach this, okay, would be to go ahead. Just gonna get another line and look at all the candles which are colored instead of gray, okay? And out of all those color candles, construct a zone which is between 106.53 to 106.94. And if tomorrow the EMF falls within that area, then you can go ahead. Wait a minute, right there. Now I did it accurately. So now you can go ahead and accept the trade and plan on a trade to the downside. Again, I cannot plan the trade now because I'm really not positive this is going to happen tomorrow. It could, but it's a manual action you have to do, and I'm not really sure it's going to happen because while the market has been going down, in the last one day, the price went up a little bit. So you may see that EMA stay at 107.20 something tomorrow, and that would mean it's above 106.94, and therefore there's no trade. Okay, so I'm not gonna put more time into planning anything here. I'm just gonna leave this trade to you as a homework to reconfirm this trade tomorrow, and if the setup is valid, then you can go ahead with the next steps of the methodology, which would have you to either buy a put or do a bear put spread, buying a put and selling a put at the same time, and position yourself to benefit from a drop in PTON, which is likely to happen based on our methodology. Okay, so I'm just going to move to the next one, which is CNC. Okay, I'm just waiting for the stock to load. You can see on the top left PD, which stands for pending data. So we're just going to wait. Very good. We got it. So 41%, that is not acceptable. And what about IQ? That's 42%, so it's not acceptable either. Okay. So to be honest, I'm quite surprised that we have so few symbols in those searches. Again, as I told you before, I had issues running the scanners myself today, I believe, because Precision was doing some sort of maintenance, and that may be the reason. So yeah, so we're gonna have to go with it, but I would not be surprised that you rerun it and you get more symbols. Okay, anyway, so notice now I'm moving from directional short to neutral short. Okay, I did click on the wrong place. Neutral short, here we go. Okay, so why am I looking at neutral short? Well, because again, I don't have non-directional trades which create positive theta, and the only thing I got here is trades that make money on the way up. So hey, let's add trades that make money on the way down, and also add positive theta. So that way I kind of offset two things in one shot, even though it's not the proper way to do it, but at the same time, I don't have opportunities to do non-directional trades. So this is the closer I can get. And if you desperately needed to add positive theta in your account, then you will need to go the route of credit spreads instead of iron condors, because if it's not available, then it's not available. Okay. So I just got my list of non-directional trades. The first one on the top is CRM, Salesforce.com. So we're going to look at it and notice how, well, two problems. First, 44%, that's not good enough, even though if I switch to regular session, it may be good enough. Let's see. No, 47.84, so not good enough. And also earnings on December 1st basically invalidate the trade. Okay, so what about IRTC? Okay, so just waiting for this to load. We don't have information about earnings, which probably means that earnings took place recently. I'm going to double check that. But before, my main concern is to see that value so low. And here we go, 44%. It's something that we simply don't accept, isn't it? So what about pre and post market? It becomes 38, is even worse. Okay, so we will not accept such trade. So I'm just going to move to Jazz and see if that one is acceptable or not. Okay, so another stock with no data available for earnings here on the bottom left. So again, I'm going to check that in a different way, but only if the probabilities are going to be okay. So for now, it shows 51. Now we got the whole data loaded and we got 50. So that is much better. What if we look at pre and post market? So pre and post market is 45. That is not acceptable. So, but 50% is acceptable indeed. Okay. Now, I'm not going to spend time on that stock. Okay. And why? Well, because while I do have two UFOs, they are very far away from each other. So I would need to be selling the 159 or the 160 strike. And given the fact that the current price is $20 lower, I'm just going to get paid nothing at all. And it's probably going to be a complete wasted time if I was to do this trade. Okay, so I'm just gonna pass. Now, for a couple of times we had stocks that didn't have data available for earnings. So when you find that, what are your options? Well, option number one is don't take the trade, just ignore it, because if you don't know when earnings are, you may be trading blind, so don't do it. On the other hand, if you activate an indicator called DPS postings that comes by default with TradeStation, it's actually what's called a show me. So if I do that, notice how it shows you that the last time earnings were reported were there. Okay, and you could have guessed because of the gap, but also the gap could have been because of anything else, like here. Okay, so don't guess too much. Okay, just turn on EPS postings and notice that earnings took place on November 3. Okay, so in other words, we know earnings happen every 3 months. So while we don't know the next date for earning, it's gonna be at least somewhere at the end of January or February, because earnings have just been reported, and that's why no data is available, because they haven't decided on the date yet, given the fact that the date is quite far. So in other words, if you don't know the date, it's always making you think, oh, should I take a trade or not? But again, you can always do this little trick, which is to look at the EPS postings. You will see the prior postings, and if you are still very far away from those 3 months after the prior earning, so you can go ahead and still plan on the trade. Okay. Good to see you, Prasad. How are you? Good to see you. So therefore, again, as I said, I'm going to pass because the second UFO is so far away. But this is how you would find out. And if that UFO had been closer, I would then put time into planning the trade. Okay, not a problem. So INCY. Okay, so this is another stock loading. So we need to wait for it to be loaded so we know the probabilities. Earnings here are going to happen on February 11, as you can see. Okay, February 11 right here. So that is definitely a good one. 45%, that's not good. We need 48 minimum. What about pre-post market? 40%, not good. So we move to JBSS. Okay, earnings are January 27. So that's good. We have plenty of time in front of us, waiting for the PD to go away. Okay, so we can go ahead and assess probabilities. So we got 51%, and guess what? We do have UFOs above, and guess what? They are not so far away from each other. So here we may have an opportunity. Okay, now I would also like to look at a regular session. 51 becomes 54%. So yeah, really we have multiple possibilities here with JBSS. Okay, now I have never traded options on that stock. The fact that that stock is on the scanner means that at least there is open interest and certain level of liquidity in the option, but I have no idea what we're going to see on the option chain. So I'm going to load the option chain for that stock. We may realize, wow, this is not liquid enough for us to trade. We may realize, you know what? Oh, wow, while this stock is not very well known, it's actually a very nice opportunity we just found. Okay, so this happens many times, that new stocks or stocks that were not so liquid start becoming more liquid, and next thing you know, you have good liquidity. But it would be a little bit of a surprise to me, at least in this time, given the fact that I never traded JBSS. Okay, should be a good stock because it starts with JB. So not sure this is a funny joke or not. Hopefully you're laughing. Anyway, so December 18. Notice that probably there is not that much liquidity, given the fact that that stock does not have weekly expiration dates. It's only monthly expiration. So that tells you that liquidity should not be not be too good. Now the good news is that while liquidity may not be too good, the fact that there is only monthlies means that all the liquidity is going to be concentrated on only 4 expiration dates. So we may be able to make it work. Okay, we may be able to make it work. We'll see. So let's take a look at. Oh no, absolutely not. This is absolutely crazy. I don't know. I really don't understand how that stock passed the filter. That should be an error on the TradeStation scanner, because as you can see, there is no open interest, only 10 contracts. There is no open interest at all on the put side. I really don't get it how that stock is in our list. Mr. John B. San Filippo and Son Incorporated. No idea how you ended up on our screen. Anyway, fun one, I guess. So let's look at the next one. I told you I had some issues running the scan, so probably that's the reason. So, okay, so we'll wait to see what happened with HZNP. Horizon Therapeutics. Again, that's another stock I never traded before. So again, could be a new stock that is becoming liquid and popular. Could be another glitch, maybe. Probabilities are good though. Okay, so that's a nice thing to see. So, but again, what did I say? The symbol was HZNP. HZNP. Prasad, good one. So you were listening. Very good. So what do we have with that stock? Well, okay, so we have an error here. So with that stock, same story. We have only monthly expiration dates. Now notice we have more dates, which means that we should expect more liquidity. But again, I'm a bit skeptical here. So let's take a look. And yeah, it's weak. Okay, 1.5 to 2, 4.92, yeah, 5 to 6. Yeah, liquidity is not there. Okay, in this case we do have some open interest. Okay, so let's say fair enough in this case. The prior case, I have no idea how the stock ended up in the list. Okay, so let's do this, my friends. Let's take a look at neutral long, since we need theta trades. So let's take a look at neutral long and see if any of those trades meet our criteria. And if not, so we will call it a day. Okay, so we have Tesla. Tesla giving us the probability we need. Earnings happening on the 27th of June. 27th of January. Certainly that is giving us multiple dates, okay, in front of us for us to choose from. Tesla, it's making all times high. So certainly, a good setup for a credit spread pointing at the upside. If I change session to pre and post market, as you can see, we even have a greater probability. So certainly lots of institutional interest coming into Tesla in the recent times, and we can see that with so many UFOs. So this one is a liquid one, we know, and this one does look like you got many choices based on dates and many UFOs. So I would say we should be able to construct a trade on Tesla. So let's do this. We got less than 10 minutes left. So we should be able to do this. Okay, notice that when I load Tesla, we got weekly expiration dates, monthly expiration dates. So that's a totally different story. It's looking good. Okay, so let's now go ahead and point at December 4, which is going to be the first one we would use, isn't it? And what I'm going to do is on the put side, anywhere, I'm going to right click and analyze and sell a vertical spread, which is the type of trade I want to do. Notice I pick any random strikes because right now I am not planning the trade yet. What I'm doing is I'm bringing my spread to the analysis tab so I can make sure that I have the right expiration date here. And while all of this is true, I change my settings to plus and minus 1 standard deviation. So now I can have this statistical calculation done for me where TradeStation tells me that for Tesla reaching 515 from now until December 4, it will not be that big of a surprise. It would be a normal thing to happen. Current price of Tesla is 575, but reaching 515, it's doable from now until December 4. And why is that important for me to know? Well, because if reaching 515, let me draw it on the screen. So if reaching 515, style, I'll do it dotted. So if reaching 515, it's a doable thing to do. So then it would make a lot of sense for me to construct my credit spread below that UFO. Why? Because reaching 515, it's doable, but below 515, the lower you go, the less likely it is going to happen. And certainly on top of that, now if I'm leaning against one of the UFOs, so now, this is kind of like, let's call it a wall or something like that. And if price was to fall that low all the way to 503, so price would very likely bounce and go back up. And therefore, constructing my credit spread below would make lots of sense. Okay, so building a bull put spread, okay, which is a form of a credit spread, okay, below the UFO. Okay, that's what I'm doing. Okay, it's a bullish credit spread. It's actually, technically speaking, is neutral. Okay, so neutral / bullish credit spread, which is located, okay, below the UFO. Just to be in a position where it's unlikely for price to go there. So since it's 501, it seems that it would make a lot of sense to sell the 500 put and buy whatever put is below. I'm not sure which one. Maybe it's the 495, maybe it's 497.5. Not sure about the strikes that will be available. Let's take a look. Okay. So again, we're looking at the 500. I'm going to have to load much more data here. So let's load everything. So if I look at the 500, below 500 we got 495. Okay, yeah, here we go. So 500, 495, those two do exist. Okay, and if I was to input those values, so sell the 500 and buy the 495 as a protection. So how much credit would I take in? That's $36. That would be the credit that I would take in. And the question is that acceptable, yes or no? And the answer is no, because what we do when we do the trades is that we look at the raw risk, which is the distance between the strikes, which is $5. Okay, and we want to collect at least 15% premium, which is 75 cents. But notice how in this case we only get paid 36. Okay, so it doesn't work. Okay, it does not work. So how do I fix it? Well, one way to fix it is, instead of using December 4, so what if I use December 11? Okay, what if I use December 11? Okay, well, if I use December 11, I still have the 500 and I also have the 595. Okay, but now the question is, what about my probabilities, right? So if I go to December 11, okay, now I get paid 78, which is more than 75, so that's fine. I'm allowed to do it, but careful, because probabilities now tell you that a normal thing to happen for the stock is to reach 595, and 595 it's below my 501. So what do I have to do? Well, if 595 is somewhere here, okay, I will need to find the next UFO, which is here, and therefore the whole thing I was doing before applies, but now I will need to position myself using 490. Okay, so 490 will be my base, and therefore below I'm going to be doing 485. Okay, so the question is how much I get paid if I do 490 and then 485. Is that going to work? Yes or no? Let's see. So if I do 485 and then I do 490, how much I get paid? Well, I get paid 60. With 60, again, it's less than 75, which is 15% of $5. Okay, so I'm getting closer. As you can see, there is an improvement. Maybe actually, if you look at this trade during market hours, because during market hours, the spreads narrow, so the trade may work. But as we are looking at the trade right now, it's not working. Okay, and therefore, December 18 would be my next try with Tesla. And notice that it seems that we have more strike price increments here, but sorry, not strike price increments. I meant to say strike prices. But again, the ones in the 490 area are $5 strike price increment. So same type of approach. Okay, so what if I do December 18? So if I do December 18, this is now telling me it could go to 476. So if I go to 476 as my reference, So obviously, the next UFO for me to use would be below 443, and therefore, assuming those strikes exist, which I'm going to check in a minute, I will be doing 445, 440. Okay, that would be the trade I would be taking. So let's see if 445 and 440 exist. They do exist. Okay, they do exist. I'm not gonna get paid enough though, because in this case, you see it visually on the chart is much further away. So if I do 445 and 440, you will see it's gonna be actually less than 60 cents. I'm pretty positive. It's 35 cents. Okay, so again, this one would not work because again, there is a big gap. Okay, those UFOs are all kind of close, but this one is so much further away. Okay, so what do? I keep going. So what if I do this trade? Okay, but instead of December 18, I use December 24. Okay, so if I use December 24, oh, and by the way, here I may benefit from $2.5 strike price increments. I like that because that's going to reduce the risk very much. Okay, so if I do December 24, now we are talking about 464. Okay, so 464 is somewhere here. Okay, meaning that the location we have here is still valid. Okay, still valid. So I can use my 445. Okay, I can use my 445, but below 445, what do I have? I actually have 442.5. Okay, so what happens if I do 445 and 442.5? I got 18 cents, which is not good enough because $2.5 times 15%, that is 37 cents, 38 cents. So I need 38 cents, but I only get paid 18. So not good enough. So I'm going to do a last try. And if it doesn't work, I'm going to give you a little advice there and we'll call it a day. Because I believe this trade, we should be able to make it work. I just need real-time market data. So what if I use December 31st? So let's check December 31st. So December 31st is bringing this down to 455. Okay, so 455 is still happening prior to my 445. Okay, so we are still fine there. So if I do 445, 442.5, again, notice that I'm still not getting my 38 cents. I get 30. Okay, so the trade, based on what we see on the screen, will not be accepted. Okay, but again, based on what I just told you, I'm pretty positive that during market hours where the spreads narrow, either the trade with December 31st, okay, let me write it down for you guys. So either the trade that we saw with December 18, okay, with the 445 and 440, or the trade with December 31st with sell the 445 and buy the 442.5, I would say during market hours where the spreads narrow, any of those trades potentially will give you either the 75 cents you need on the one on the top or the 38 cents you need on the one below. I believe it should be doable. Again, I cannot confirm it unless I see the market data, and we'll need to wait for that for tomorrow for that. But based on my experience, it looks like this should be okay. So homework for you guys. The session is over now. So homework for you, my friends. Take a look at Tesla. Look at these setups. Feel free to take a screenshot so you have it or make a note. And if you get to see that those spreads are paying enough, certainly the trade setup is valid. And doing a credit spread on Tesla with this particular configuration would be a valid choice given our rules. Okay, so looking at the chat box for the last time. So yeah, so just a few messages from you there, guys. Nothing in the form of questions. So I believe that all of you are good and you are able to follow. If it's not the case, this is your time to say if you have any final question, because we are about to conclude the session. Actually, we surpassed the ending time of the session already, so we need to say bye. But as always, my pleasure to conduct the session for you, everybody. If you haven't yet, click the thumbs up on our YouTube channel. I'm not very good at reminding you. But today I remembered. So please go ahead, and if you appreciate our sessions, do it. That's appreciated by us as well. And guys, thank you for joining me again. For all of you celebrating Thanksgiving, a very special happy Thanksgiving, especially if you joined the session late or you're watching this recorded. Good one, catching up with the recordings, and hopefully you guys are having a blast with your families. And by the way, what a beautiful celebration! What about the beautiful motive to be thankful and grateful to life and others and everything. So especially in a difficult year such as 2020. So everybody, you guys take care. Happy Thanksgiving. Big hug from me, from my team. See you in the next one. You guys take care. Bye bye, everybody.